Hello, Maverick traders. Welcome out to your currency midweek for March 8th, 2023. Corey here with you. Nice to see all of you. I see the comments there coming in. Good to be with you as well. So let's jump in here and talk markets. This has been kind of an interesting market to trade. From a technical perspective, there's some things happening in various currencies and commodities and things that are worth discussing, no doubt. And also, we traded the RBA, and that was kind of fun and successful with trading. So let's talk about a few different things. So, from an equities perspective, I personally believe we're going more towards the risk off. That ultimately we're in this, we'll look at some charts, but we're in this state of could break either way. I think we leave to the downside. And the reasons that I think we move to the downside are mostly fundamental, partially technical. So we'll talk about that a little bit more here in a minute. US dollar remains stronger overall. It's been bouncing and playing around with this 104 level on the Dixie. I suspect that the dollar could have put in an exhaustion high yesterday, not a long term or anything, but a short term. So I would kind of trade against yesterday's spike up and wonder if you can't short the dollar in the near term. Again, we're going to take a look at some charts and make sense of that together. Commodities probably struggle with the environment we're headed towards, which is higher rates for a longer period of time, economic recession looms, and there's just some headwinds that way. On the economic side this week, we had hotter than expected inflation there, and the Swiss franc has been a pretty darn good currency. Expectations there would be, well, that means that they're going to have to maybe raise rates, be more hawkish, and so forth. In the U.S., ADP employment beat expectations. It's one of those counterintuitive numbers where you're not quite sure what you're rooting for in terms of jobs. Yes, we want people to have jobs, but that makes it more likely that the Fed keeps hiking rates and is more hawkish and so on. And it makes it more likely that they push us over the edge into or into recession, which means more job losses and so forth. So it's this weird dynamic where really good data could actually create more probability of a looming economic recession. And then, like we said, the RBA hiked rates, but they did open the possibility for a little bit more of a pause, a little bit more of a slowdown. And you saw the Aussie. If you were with us on Monday night, I was doing that with Maverick. The Aussie just got hit and kept selling off there for a period of time. So let's come into some charts here. Let's go with the US dollar index first and take a look at that. If you look at the dollar index here, 104 may not look like that important of a level here, but on a longer term basis, we know how important this 104 level has been. And the reason that I'm a little bit wondering if we kind of hit an exhaustion high, so look at this on a longer term scale. There's 104. It was the major high point, the peak in both 2016, early 2017, and 2020 on the COVID spike. We cleared it last year, and now we're kind of bouncing around it. We've been running higher off of this low, so think about where the race began and the race ends in the short term. In the short term, let's go back to a shorter term time period. To me, that's what yesterday looks like, is an exclamation point potentially at the end of this in the short term. Here's where the race began. You kind of run higher for a little while, and here is a temporary, very temporary, by the way, temporary little signal of exhaustion potentially. I don't know any high level of conviction towards that, but if you come in and look at the US dollar on an ETF basis or something, you can kind of see it where we broke out here, we grind, and then maybe this is a little bit of kind of an exhaustive type of measure. I don't trust, I've been on record, I don't trust breakouts that come into a lot of overhead supply. When you can look back just on your left-hand side and see a lot of higher prices, most of these breakouts will fail. Most of them will kind of spike up for maybe a day or two, and then they'll sink right back in. And they're much better areas to take profits than they are to keep piling in. If you want to buy an upside breakout, buy it when you don't have a lot of overhead supply, right? Then it can flourish. Here, again, I just kind of look at it as a take profit. So does that mean that the dollar goes funneling to the downside dramatically? No, I'm not calling for that by any means. But I think in the short term, it should be semi-exhausted and go back into a little pullback / consolidation here for a while, and then we'll see. If I had to do something today, I think I would be shorting US dollars for a trade, for a very short-term trade, thinking that this breakout is unlikely to really take off to the upside. Again, you just have all these dead bodies, this overhead supply weighing down. And if we back this chart out a little further, you'll see it. There's just massive supply up here. And so breakouts in that environment tend to fail. This right here looked like, oh, maybe we're breaking out. Nope. No, we are not. Back here is when you want to play breakouts. We were above all the prior highs. We had no overhead resistance. And look at those breakouts. They flourished. They took off. They were phenomenal, right? Here, I don't trust it at all. So again, that's kind of my US dollar take, is it's not a real bearish setup other than potentially the way that I teach this is I call it my 4 stages of a trend. And the 4 stages will be like you're running a race. There will be a starting gun, and usually you have a big adrenaline spike there, right? If you're at the starting gate and the gun goes off, people sprint out of the starting gate. And, that's when they have a lot of energy. They're well rested. And then you get in the middle of the race and you're just kind of grinding it out. And then you see the finish line, and again, you sprint. There's 2 spots that you sprint in a race. You sprint at the very start and you sprint at the very end, right? And that's kind of how price action works, is the starting point and the finish line. And this doesn't have to be, again, it's not a major finish line. I'm not saying the dollar is going to collapse. I'm saying temporarily we're exhausted. We've run a lot over the past month to the upside. The dollar's recovered quite a bit of its gains. If it breaks and surges like that, to me, that's a sprint for the finish, much more than it looks like some compelling breakout you got to hurry and buy. I just wouldn't do that. Now, let's go back to the the S&P 500 idea. And I mentioned that this market is really in this state of equilibrium. If we come back multiple years, let's check this out. So here's what I see. To my eye, this is what I see. We've been trending lower. From the 2020 bottom, we've trended higher. And the markets are in this state of which way are we going to go? How strong is it going to be? How aggressive is it going to be? You could break higher. You could break lower. We are right smack dab in the middle of this. So when somebody says, well, what's the next big move? The next big move will be dictated by the breakout. And my money, my odds have been, like we've talked about, from that peak back here a few weeks ago when the market, again, gave a nice exhaustion signal. My money's been on that we're going to ultimately go lower. And I've been on record saying, I think this market is going to tumble to the downside and trade down there to the low 3,000s, and it's just a more risk-off environment. This is the big picture concept that I have, is that we're going to be more risk-off. Now, if we were to say why, will you weigh the evidence? We're going from QE to QT. We're going from a period of unbelievable amount of money printing to now money destruction, to basically doing things that stall economic growth, like raising rates. When rates go up, it's harder to get money or more expensive, and just things don't work, right? The things that we could have pulled off when rates were really low, maybe there's just not enough money to be in it. So we don't do that business. We don't do that idea. We don't build that building. We don't buy that real estate. And so we're in this transitional phase. The Fed has tried to tell you that we are going to stay higher for longer. The idea that we were going to be cutting rates later this year, I just didn't buy it. I, most of Maverick, we just don't buy it. Why don't we buy that? Well, here's how I would compare it. I call it the golfer analogy that I came up with, which is Powell, Fed Chair Powell, is in a spot where he's like the golfer that just hit one in the water. He stands up there and he's got 100 yards to the pin and there's water in the front and he just plunked one in the water. So he's already screwed up once. What does the golfer do? The golfer says, well, I can't sit here and hit him into the water. I've got to take a little bit more club. I got to make sure that I get it to the hole and even behind the hole, right? So they basically err on the side of overdoing it. Fed Chair Powell has already admitted that by calling inflation transitory and screwing that whole thing up, they allowed inflation to run out of control and get up near 10% and so forth. They've already screwed up big time. They don't have any cover to try and play it safe and, or to, pardon me, to play it aggressive and swing for the pin and so on. They can't do that. They have to err on the side of we can't screw up again and let inflation keep running hot. We just don't have the market doesn't have our back on that. And if we screw up twice and we let inflation get out of control and entrenched, that becomes a bigger problem. So when Fed Chair Powell spoke before Congress yesterday, he made this very clear that rates are going higher. The expectation the market should have is that they're going to continue to go higher, and their number one goal right now, and they're fixated on it, is to get inflation lower. And if that means sacrificing the economy, if that means people lose jobs, if that means we go into an economic recession, they do what they're going to have to do because they can't screw up inflation any longer. So when you start weighing the evidence, the probability of this market breaking lower seems pretty high. You can see, we've talked about this. There was your nice 5-wave bear market. We went through a nice ABC style correction. And now what? I suspect another 5-wave type of pattern takes us down into the lower 3,000s on the S&P. So make no mistake, I'm fully on record as saying that that's what I anticipate to happen. What's interesting is what a difference a week makes, because last week, well, the last few weeks that I've been on, I said, I thought the markets were going to bounce. I'm waiting for the bounce to short into. I'm bullish for a bounce. I didn't think we'd go to new highs. We got it. Last week, we got the bounce. Now, it didn't bounce where I thought it would. We chopped around that a bit, and then it spiked up, right? So it was a little bumpy, but we did get that nice rally. This was a 50% retracement of the decline and so forth, and just it was flat out a shorting opportunity, an area to be bearish, to take off bullish trades and so on. And I don't think it's anywhere close to done. I would anticipate that in the coming months, it should get a lot worse, would be my expectation. So that might be bad news. I don't know. It depends on how you're positioned or whatever. I think it's very good news, because if you're an investor in stocks, you want lower prices to be able to buy cheaper. If you're a trader, you love some volatility. Lower moving markets mean higher volatility, higher VIX, bigger moves, faster moves. So I see this as a real positive. As we look at the week so far, we're selling off. The Dow, the S&P, the NASDAQ, they're all down this week. Crypto taking it on the chin, oil, gold, they're all getting hit. So weekly performance, everything in the negative territory. We've already looked at the S&P. Again, I think the path of least resistance is that ultimately we're going down from here, right? You could break either way. I think we're breaking to the downside. And I think that there's more selling to come. It's going to intensify. So from a currency perspective, the dollar's the strongest this week. The Aussie we shorted on the RBA, and that's where most of its selling came from. It's actually bounced a little bit yesterday, so it was even worse than that initially, which created a nice trading opportunity. I don't really want to buy any of these, but I think you could actually play the US dollar to kind of stall out here. So if you're looking at something to buy, maybe you look in the euro area, euro or Swiss franc or something like that. I've liked the euro long for a period of time. I think that can still make sense. Crypto's now breaking down. We can look at those charts, but I would be net short crypto. Generally, I suspect that selling's going to intensify. There's a very real, I mean, QE was just part of what fueled the creation of all these new products. Bitcoin and Litecoin and Ethereum, and then you've got Tether and all these different financial products. You've got NFTs, QE, and just massive amounts of money creates a variety of different things that can bubble over. And that's ultimately where I think crypto has been is it's a big bubble that's bursting. So do I think that crypto can go massively lower? Yeah, I would expect it to do so. Put in your mind what you think is the craziest number you can envision for Bitcoin, and then think about it probably going even lower than that. That's how I would think about bubbles bursting. So if in your mind you're like Bitcoin's at 22,000, man, it would be crazy if it went to 15,000. No, it's going to 12. It's going to 10. It's going to 8. That's the type of numbers that I would put out there is whatever you think is a crazy wild number, I'd go ahead and compound that a bit and anticipate that that's very probably, in my opinion, what's going to happen in the coming years ahead. So as we look at the markets, not great. We're trading below the 20, below the 50. Slope is sideways. I'm of the camp where we were looking for a market bounce. We got a nice bounce, big bounce in the markets. 50% retracement, but that's all it should have been, is just a lower high that proceeds to the downside. So my outlook is certainly moving this way. I'm more in the bearish camp. And like we say every week, the market will show whether that analysis is right or wrong with the profits and with the price moves and things that happen over time. Looking at a few of these others, international markets, it's the same picture. I don't see a whole lot of difference. If you look at crypto, it has now started to reverse. Interestingly enough, crypto shouldn't, the collapse shouldn't be here at these prices. Crypto's collapse should come quite a bit lower. As you take out some of these major lows and so forth, that's where the selling really gets out of hand. So right now, if I were trading crypto, see how there's a lot of prices down here, I would be selling rallies. You'll get them. You'll get some bounces, and you sell those rallies and play it back to the downside. Then you wait for the next rally, you sell it, right? Kind of like we were playing the S&P the last couple of weeks, where I said, I bet you get a nice rally, you get a nice pop that you can short the stock market into. That's where I'm at in crypto, is I'm not so much chasing the downside momentum. Where I think your breakdown trades are best is going to be way down here. That's when you break supports and so on, at those levels, it might be free fall for a while. So in my mind's eye, I envision a scenario where you fast forward towards later this year, and we're having discussions about how crazily crypto assets are declining. Maybe there's collapse in Tether. Maybe there's this. Maybe, I don't know exactly what the world will look like, but in my mind, I see chaos and catastrophe in the crypto markets. Now, I can't tell the future. I'm not suggesting that I have a fortune, I'm some sort of savant or prophet or something. I have no idea exactly how it will happen. I always say it's much easier to know what is going to happen and much harder to know when. I truly believe that that is what is going to transpire. The when, boy, I don't know. It could happen quick. It could take months. It might be early next year. I do believe this is going to happen. The question is much more along the side of, well, when does it happen, right? So yeah, I could sell fortune cookies. That's about what I could do. I am not a fortune teller. I could put a little statement there in the fortune cookie that says, careful with crypto or something like that. All right, as we look at the schedule here for what's coming out, Fed Chair Powell speaking today. That's pretty much it for the rest of today. And then you get into tomorrow. We got the Bank of Japan press conference and monetary policy statement late on Thursday night. Those have been potentially volatile. Usually the Bank of Japan, you sort of sleep through it and it's just a non-event. Right now, these have been, where some policy changes have taken place and so forth. And then Friday, you get jobs data. And last time, there was a huge jump up in the employment picture. And this was a great number. You're like, wow, people are getting employed. Great. And then you go, oh crap, the Fed is going to hammer this market with higher rates and so on. And it was part of a catalyst that kind of fueled the downside move. It's interesting how well things played out, where you were set up well for that ABC correction, and now you can just see the dominoes toppling over. A strong employment number is not necessarily good for markets. Remember, that makes it more likely for the Fed to hike and so forth. Trading the US dollar into that event, I think we're seeing a little bit of an exhaustion high. So I would be tempted to try to short US dollar pair, some sort of pair today, and then maybe you still have that position on going into the non-farm payrolls and can have a home run type of trade. I'd only hold it if I was up a nice amount of pips, but that would be a potential idea. If we come over here and look at some charts, so I want to go back to Aussie CAD just because we traded it together earlier this week. So look at the support back here. This was our target. We were looking at shorting Aussie CAD on Monday night. You got short right in here on the announcement. It had the bearish Bollinger Band set up, right? Hit the upper band below the 50 and so on. And then the energy just surged to the downside. It was perfect. We were short the Aussie. It was falling to pieces. We said this would be the target. And it probably was going to take a few hours. It did. It took about 4 or 5 more hours. And in the middle of the night, it hit your target. Notice that, that's 70 pips or so. That was a nice trade. If you had held on, you could have made even more. Now, I didn't profit from this personally, but you could have potentially held on to part of the position. You could have taken profits on half and left half in, and there was a lot more profit potential there to go. Of course, we've bounced a bit recently, but that's kind of the full picture there of Aussie CAD. Now, I mentioned a couple of ideas that I would kind of focus on. So let's just go into US dollar. Like I said, I see this as, here's the start of the race. This is a little bit of a sprint to the finish. Should be a little exhaustion point. Japanese yen, still in its little downward trend. Euro broke out. We said last week, remember we talked about that if you want to play a breakout, Euro should have momentum. It doesn't have the overhead resistance. So it's looking better in a cleaner breakout. It's holding its breakout. It's moved higher since the breakout day and so forth. Swiss franc on the cusp of potentially breaking out. And once again, Swiss franc doesn't have the overhead resistance. So this one could fly to the upside. Those two look to me like the best buys. That Euro and Swiss franc are just the strongest. They're just the best. I mean, that's kind of where we're at. So US dollar is trying to break out, but it's doing it with all that overhead resistance. It's just a different look. I don't trust this breakout. I do trust these potential breakouts. British pound stuck in a range. CAD sort of stuck in a range. Aussie weak. You're much more on the short side of Aussie with everything. And then Kiwi, kind of, middle ground. Do we trust a breakdown? Well, you got a lot of price action underneath. Not really. I might short the rallies, but don't really trust it on the downside as much. So for me, for my money, Euro and Swiss franc long. And then if you want to, maybe we're overthinking it. Maybe this is stupid to even think about that it's a little exhaustion zone. But to my eye, that's what it looks like. So if we come over to some of these US dollar pairs and think about US dollar on the short side, you do have a Bank of Japan meeting, and I suspect it's going to back and fill. Swiss franc, playing it to back and fill, playing it to back up here. Buying the euro against it. Well, that's not really in the right chart, but that would be the idea, is expecting the euro to strengthen out of this, that the correction is done. And here's something that's sort of interesting about this Euro USD chart. This is probably, as far as charts that I look at, I'd have to say I probably pull up Euro USD more than any other chart. It's the two major currencies in the world. But if you look at this from the standpoint of 1, 2, 3, 4, 5, maybe, usually the ABC comes back to about wave 4, which is what we've done. It's not perfectly clean, but maybe you can kind of look at it in that realm, that, you know what, we've made our correction back down. If you follow Elliott wave theory, then you'd say, well, it made 5 waves up. The ABC usually brings it back to about wave 4. That's what we've done. Where we should go now is this way, shouldn't we? That's kind of the idea there. So, I don't mind that type of concept. Now, the daily chart is not bullish yet. The 12-hour, not bullish. The 4-hour, not bullish. The 1-hour, not bullish. So we still have work to be done. There's not a setup there in terms of the chart. We'd have to give this a little bit of time. So maybe you get an entry tomorrow. Maybe there's some constructive price action that reverses some of these moves today and you can buy it into tomorrow, or maybe it happens on Friday. I don't know. But that would be an interesting thought. If I come over to dollar Swiss franc, it's kind of the same thing. It's very similar idea flipped around. Now dollar's listed first, but it's the same thing. Overall, you really finished that dollar weakness. Now the dollar has strengthened, and see the ABC coming up to where wave 4 was. See that? And so now we should resume the downward trend. US dollar should begin to weaken versus the Swiss franc. That's how I see it. So, but again, we're not in a bearish setup yet to really take advantage. I don't see anything in these charts that's really bearish right now, and setting up for it. So we have to be a little bit patient. But that's sort of, my breakdown of ideas would be definitely. It seems to make sense to me, euro and Swiss franc on the long side. US dollar appears to be stronger. I happen to think that's a little bit of a sprint for the finish. time will tell. Time will be the ultimate, it will reveal whether I was right or wrong about that. Yeah, so looking at other currency pairs, that's what I'm focused on. I don't have a position in these yet, but as traders, we always try to kind of plan out our trade and then follow through and trade that plan if it sets up, right? I don't know if these will set up. I don't know exactly what the future holds, but I would be prepared if they do. If I get a good opportunity to get short US dollar against the Swiss franc, to get short the US dollar and buy the euro against it. So basically what we're saying is you're looking for a nice buying opportunity in that, or a nice shorting opportunity in that. And either one of those gets you short US dollar, thinking that it has hit an exhaustion high, right? And that would be the potential currency pairs to watch. Yeah, I hope that was helpful. Good stuff. So let's come back over, take a look at the rest of this week. So we have our currency recap that'll come out tomorrow. We'll also send out the preview of the U.S. payroll report. So getting prepped for Friday's payroll report, that number coming out is likely to fuel some volatility. I would anticipate 1% plus of stock price movement, something like that on Friday. So be prepared. We'll send out the preview on Thursday, and then we will trade live. So join us on Friday morning to trade the payrolls, and we'll see what that brings for US dollar pairs. Thanks again, everyone, for being here. Hope you enjoyed the currency midweek. Have a great rest of your week, and we'll see you next time. Goodbye, everyone.